Hello and welcome back to another video. Today we're going to be talking about one of the most popular buzzwords in the financial world, cryptocurrency. If you're interested in learning about how this digital currency works, then you've come to the right place. To begin with, cryptocurrency is a digital payment system that doesn't rely on banks to verify transactions. It's a peer-to-peer system that can enable anyone anywhere to send and receive payments. Instead of being physical money carried around and exchanged in the real world, cryptocurrency payments exist purely as digital entries to an online database describing specific transactions. When you transfer cryptocurrency funds, the transactions are recorded in a public ledger. Cryptocurrency is stored in digital wallets. Cryptocurrency received its name because it uses encryption to verify transactions. This means advanced coding is involved in storing and transmitting cryptocurrency data between wallets and public ledgers. The aim of encryption is to provide security and safety. The first cryptocurrency was Bitcoin, which was founded in 2009 and remains the best known today. Much of the interest in cryptocurrencies is to trade for profit, with speculators at times driving prices skyward. So, how does cryptocurrency work? Cryptocurrencies run on a distributed public ledger called blockchain, a record of all transactions updated and held by currency holders. Units of cryptocurrency are created through a process called mining, which involves using computer power to solve complicated mathematical problems that generate coins. Users can also buy the currencies from brokers, then store and spend them using cryptographic wallets. Let's take Bitcoin as an example. When someone sends Bitcoin to another person, the transaction is recorded on a public ledger called the blockchain. This ledger is maintained by a network of computers around the world, called nodes, that verify the transaction and add it to the blockchain. Each transaction on the blockchain is verified using complex mathematical algorithms, which makes it impossible to tamper with the blockchain. This ensures the security and integrity of the network. If you own cryptocurrency, you don't own anything tangible. What you own is a key that allows you to move a record or a unit of measure from one person to another without a trusted third party. Although Bitcoin has been around since 2009, cryptocurrencies and applications of blockchain technology are still emerging in financial terms, and more uses are expected in the future. Transactions including bonds, stocks, and other financial assets could eventually be traded using the technology. There are many different types of cryptocurrency, but Bitcoin is by far the most well-known. Other popular cryptocurrencies include Ethereum, Litecoin, and Ripple. Each cryptocurrency has its own unique features and uses, but they all operate on the same basic principles of cryptography and decentralization. You may be wondering how to buy cryptocurrency safely. There are typically 3 steps involved. These are: Step 1. Choosing a platform. The first step is deciding which platform to use. Generally, you can choose between a traditional broker or a dedicated cryptocurrency exchange. Traditional brokers. These are online brokers who offer ways to buy and sell cryptocurrency, as well as other financial assets like stocks, bonds, and ETFs. These platforms tend to offer lower trading costs but fewer crypto features. Cryptocurrency exchanges. There are many cryptocurrency exchanges to choose from, each offering different cryptocurrencies, wallet storage, interest-bearing account options, and more. Many exchanges charge asset-based fees. When comparing different platforms, consider which cryptocurrencies are on offer, what fees they charge, their security features, storage and withdrawal options, and any educational resources. Step 2. Funding your account. Once you have chosen your platform, the next step is to fund your account so you can begin trading. Most crypto exchanges allow users to purchase crypto using fiat currencies such as the US dollar, the British pound, or the euro using their debit or credit cards, although this varies by platform. Crypto purchases with credit cards are considered risky, and some exchanges don't support them. Some credit card companies don't allow crypto transactions either. This is because cryptocurrencies are highly volatile, and it is not advisable to risk going into debt or potentially paying high credit card transaction fees for certain assets. Some platforms will also accept ACH transfers and wire transfers. The accepted payment methods and time taken for deposits or withdrawals differ per platform. Equally, the time taken for deposits to clear varies by payment method. An important factor to consider is fees. These include potential deposit and withdrawal transaction fees plus trading fees. Fees will vary by payment method and platform, which is something to research at the outset. Step 3. Placing an order. You can place an order via your broker's or exchange's web or mobile platform. If you are planning to buy cryptocurrencies, you can do so by selecting Buy, choosing the order type, entering the number of cryptocurrencies you want to purchase, and confirming the order. The same process applies to sell orders. There are also other ways to invest in crypto. These include payment services like PayPal, Cash App, and Venmo, which allow users to buy, sell, or hold cryptocurrencies. In addition, there are the following investment vehicles. Bitcoin trusts. You can buy shares of Bitcoin trusts with a regular brokerage account. These vehicles give retail investors exposure to crypto through the stock market. Bitcoin mutual funds. There are Bitcoin ETFs and Bitcoin mutual funds to choose from. Blockchain stocks or ETFs. You can also indirectly invest in crypto through blockchain companies that specialize in the technology behind crypto and crypto transactions. Alternatively, you can buy stocks or ETFs of companies that use blockchain technology. The best option for you will depend on your investment goals and risk appetite. One of the main benefits of cryptocurrency is that it allows for fast and efficient transactions without the need for intermediaries, such as banks. This can save time and money, especially for international transactions. Another benefit is that it provides increased security and privacy for users, as transactions are encrypted and anonymous. Cryptocurrency also has the potential to be more stable and resistant to inflation than traditional currencies, as it is not subject to the same economic and political forces. When it was first launched, Bitcoin was intended to be a medium for daily transactions, making it possible to buy everything from a cup of coffee to a computer or even big-ticket items like real estate. That hasn't quite materialized, and, while the number of institutions accepting cryptocurrencies is growing, large transactions involving it are rare. Even so, it is possible to buy a wide variety of products from e-commerce websites using crypto. Here are some examples. Technology and e-commerce sites. Several companies that sell tech products accept crypto on their websites, such as AT&T and Microsoft. Overstock, an e-commerce platform, was among the first sites to accept Bitcoin. Shopify, Rakuten, and Home Depot also accept it. Luxury goods. Some luxury retailers accept crypto as a form of payment. For example, online luxury retailer BitDials offers Rolex, Patek Philippe, and other high-end watches in return for Bitcoin. Cars. Some car dealers, from mass-market brands to high-end luxury dealers, already accept cryptocurrency as payment. Insurance. In April 2021, Swiss insurer AXA announced that it had begun accepting Bitcoin as a mode of payment for all its lines of insurance except life insurance. Premier Shield Insurance, which sells home and auto insurance policies in the US, also accepts Bitcoin for premium payments. If you want to spend cryptocurrency at a retailer that doesn't accept it directly, you can use a cryptocurrency debit card, such as BitPay in the US. So, that's a brief overview of how cryptocurrency works. While it may seem complicated at first, it is actually a very simple and secure way to transfer value around the world. Whether you're interested in investing in cryptocurrency or just curious about this new technology, thanks for watching and hope you found this informative. If you enjoyed it, please be sure to like, comment, and subscribe for more videos like this in the future. See you at the next one.